Hi everyone, my name is Sam DeCourt, Wealth Advisor at Pi Funds. Thank you for tuning in to our June video update. Joining us today is Matthew Young, who heads our Property and Infrastructure Fund, as well as Chief Investment Officer Mike Taylor. Hi Mike, hi Matt.
Hi Sam.
Hey Sam.
Mike, once again, a huge amount happening in markets, a lot of headlines, a lot of noise. Can you summarize it all for us, please?
It's pretty wild out there, Sam, actually. The AI trade is in full swing. There's lots of people reminiscing to the dot-com bubble out there. We don't quite feel it's the same. Dot-com was periods where companies with no revenue were IPOing on the NASDAQ and prices going to the moon. Today, we've actually got prices of AI hardware-related companies that are shooting up on actual revenue and actually really strong earnings. So that's what's driving a very small segment of the market. You're seeing some old favorites like Hewlett-Packard, Dell, Micron, up 30% in a day in some cases. So it's pretty crazy out there. Of course, at the time of recording, the war is still ongoing in Iran and the rest of the Middle East, but markets seem pretty sanguine about the outlook, and the oil price fall has kind of reflected an optimistic ending to the war and the reopening of the Strait of Hormuz in the not too distant future.
Thank you, Mike. And a little quick segue as we have the SpaceX IPO coming up shortly. Is that something that we'll be looking to add to our Global Growth 2 fund?
Good question. SpaceX will likely be in the index, so therefore it's likely we will have a stake of some description in SpaceX.
Over to you, Matt. So you run our Property and Infrastructure Fund, and for people who don't know much about this product, it invests in sort of the most defensive of all companies, where cities, towns can't survive without these sort of defensive companies. How has it held up through the Iran conflict? How are you feeling about it?
Yeah, it's held up pretty well. We have particularly our energy infrastructure names. And I think the thing that really excites me is even once we reach a equilibrium in the Iran conflict, there will still be lasting impacts. So if you're sitting in Europe and you import a lot of your energy, all of a sudden Iran, but also previously the Russian gas being cut off, means that energy security is top of mind. And that helps quite a few of our holdings that help facilitate energy in Europe.
Matt, what are some examples of portfolio changes you've made, companies you've added, for example, over recent months?
So I'll call out Cheniere Energy, which is a company that owns and operates LNG facilities on the US Gulf Coast. So they take natural gas that is piped in from the US, then they supercool it into liquid natural gas, LNG, and then that product is put on ships and exported to Europe and Asia. And there it's used for industrial purposes and power generation. So they have benefited as about 20% of the world's oil and gas has been cut off in the Middle East. And coming back to Europe, we've also been adding to European utilities that will benefit from Europe building out their own energy.
Are there any parts of the market that you've been reducing or that you don't want to be in when this is going on with oil prices?
So we have rotated some of our airports and we've skewed towards some of the more defensive airports that have less debt. There are several I can think of that have sort of partway through a heavy capex cycle. So any sort of short-term softness may impact them. But yeah, otherwise probably leaning into some of those energy thematics I spoke to, so European utilities and some of the US names that export.
Mike, infrastructure is an asset class that you've been pretty passionate about over the last couple of years. You got anything to add to what Matt's mentioned?
Yeah, I mean, infrastructure assets are incredibly stable. They're a great ballast to any portfolio that a client might have. A good example of actually how you can use an event like the Iran war to take advantage of price fluctuations in these infrastructure assets. So take, for example, an airport. The cash flows of an airport in 10 years' time are reasonably predictable and likely pretty stable, and won't really be impacted by what happens today. But of course, the market doesn't think like that. The market thinks 6 months ahead or 3 months ahead. And many of the airport companies have seen their price fall 20 to 25% since the start of the conflict at the end of February. So we view that as an opportunity to increase exposure to airports. We had been underweight airports, as Matt mentioned, through the start of the conflict. But actually just today, we've closed that and looking to buy back into the airports that are now a lot cheaper than they were 2 or 3 months ago, just simply because of a short-term event, which we don't think will affect their valuation in 10 years.
Yeah, good example. All right, Mike, thanks for joining. Matt, thanks for joining. And most importantly, thank you to our clients and audience for watching. And we'll see you next month.
Thanks, Sam.
Thank you.